Hello everyone. Today I want to show you a trade I took last week in the euro against the Australian dollar. Um, Members of the live room know I'm very bullish on that pair. I have been bullish on that pair for the last couple of months. So I was always looking for long trades here if the lower time frames were in line with the higher time frame. The pair has been in a nice run up for the last couple of weeks. I'm showing you here the 30-minute chart, and I put on a hourly 100 moving average on that 100 hourly EMA. I like to use that moving average. I found out that the price often respects that moving average. If you see several bounces of that EMA, or if it breaks that moving average, often a retest. So basically, if a pair stays above that moving average, I consider that pair being bullish, and if it breaks significantly below that EMA, then bearish. As you can see, the pair made several higher highs and always retraced back to that EMA. I can even show you more examples if I scroll back, so you can see that EMA hold up really well here. And I decided to go long when the pair made another higher high on that occasion here, came back to that EMA, and yeah, we got then white momentum candles of that EMA here. If you look at that in the 5-minute chart, you will see a little double bottom here. It came back, as you can see here, the red momentum candle didn't make a lower low and broke then that little high point here. So I went long. If you don't know, you can actually show your trades in the MT4. All you have to do is go back to your trade history, click on the trade, and then drag and drop it in your chart, and then you see something like that. You see the entry, the initial stop level, and the exit here. So I had a very tight stop below that low here, about 45 pips I think, and my target was up here. I ignored basically that little spike here. I took that as resistance. That was my target, and I got an out for 70 pips, so a pretty decent risk reward ratio after all here. One look at the weekly chart. This time frame gives you a broader perspective of things. So basically, you can see that we are about to make a retrace here of that huge downfall. But if we look at the Fibonacci retracements here, you can see that the pair didn't even make yet the 23.6 retracement yet here. So that will be the next resistance. We have also a high point here, also that 200 weekly is coming up. So I think we could see a bit of a retracement once we get here. So overall, I am very bullish on that pair. We had the little inverse head and shoulder pattern, and I thought we would break out here, but it just retested that low point once more before the push higher now. Regarding the Fibonacci expansions, we are in wave number 5. We got that first impulse wave, retrace, second impulse wave, retrace, and we are on wave number 5, which is then the final wave of that count. So I expect a bit of a retracement here, maybe an ABC correction, and then a run up higher here. So we have several open targets still from that first impulse wave. We got past that 100 level 1. 61.8 will be then the next fib expansion, and so on. Final target will probably be up here at 152, or maybe a bit higher here. That will be then, yeah, maybe up here, so 154, 55, which has been that former support. We also got then the 261 fib expansion, which will be then also my final target on that fib expansion here. So still a lot of room to go. If we go to the weekly chart, it's just the beginning of the retrace here, if that is really the bottom. So yeah, I think if we get a pullback here, I am a strong buyer of that pair.